Big, bold news right now. This is regarding the US dollar. This is going to affect not just every American, but everybody around the world. Why? Because of what China is suggesting right now today. The very first thing is the potential for the beginning of the end of the US dollar. Don't believe me? Stick with me in this episode. The second thing, the economic crisis that's taking place that's really unfolding as a result of all of this. The third is what are people actually doing about all of this? It's happening right now today. Let's begin. The biggest news of not just the day or the week or the month or the year, this is massive. Right now, it is happening. You could see that China is calling for oil to trade in the Chinese currency at the Gulf Summit in Saudi Arabia. I had been covering this for a little while now because it is so important, suggesting to you that up until this point here, we're looking at a time in which there has been a lot of tension between the two sides. I'll break that down further in a few minutes, but I wanted to suggest to you how key this really is, because today you have the US dollar being vastly dominant when you look at total trade that takes place right now. And it is important to follow along with that because it's going to tell a story. You're going to see the fact that the US dollar has this monopoly, and that allows it to do things no other currency can do. But as China starts to make friends with different countries and starts to do handshakes and deals all over the place, they're going to be in a different position, and that puts the US dollar at risk. Let me show you something real key. If you haven't seen this already, take a look. China would also, quote, make full use of the Shanghai Petroleum and Natural Gas Exchange, a platform to carry out yuan settlement for oil and gas trade. Not only do they want to do bilateral trade in yuan, but they want to actually allow them to do this on their own exchange. This is massive. This is so big right now, and I'm going to have to break it down in further videos. I'm going to give you the details of it, but I just wanted you to know the news. Look, they haven't accepted it. They haven't done that, but you could see here that a Saudi source told Reuters that a decision to sell small amounts of oil in yuan to China could make sense in order to pay Chinese imports directly, but it's not the right time. And I think that this is going to be something that we're going to hear a lot about in 2023. This is so important, not just for China or Saudi or the US. It's going to affect everybody, because if they do not have that strength and dominance, look at China. Look at Saudi Arabia. Saudi, obviously very prominent in the oil business. Everybody needs oil today. And despite what we've been told about energy independence in the United States, you could see what happens to the gas prices. You could look at what happens to oil in general. It still has an impact on people. You could see that right now, despite all of this fracking that was taking place, and you see how many companies are in the shale industry. They don't want to do this. They don't want to expand anymore because they're saying we're just going to get shut down. All the green energy, they're pushing us out. So no matter what the price of oil, we're not going to get into it. That is huge. So you watch what happens with China, and of course with Saudi, and this is going to break down into something major in 2023, but this is the big news that they want to. Like I said, it hasn't happened yet, but this has major implications, and this is really connected in with the tensions that we've been seeing all along. Look, if they were friendly, if everything was fantastic, you kind of let things slide, but that's not happening today, particularly in the situation of Taiwan. China suspends alcohol imports from Taiwan as tensions mount. Now, it's not a huge deal because they didn't really do much in the first place, but it's still important, not just for the businesses of Taiwan that are doing the exports to China, but look, this is important on a different level. You see how many different businesses have really been blocked from doing their exports to China. It's not just alcohol. There are other things as well. Not too much, but you see imports halted of some beverages that have happened, food, I believe. And this just gives us an idea of the tensions that have been taking place. Look, so many different things. It's not just about Nancy Pelosi, but that was one factor all along. China asks insurers to buy bonds as retail investors pull back. China is saying to their financial system basically that you got to push for this. You got to engage in whatever level of stimulus you can. So they are doing this. They're reducing the reserve ratios for their banks, allowing the banks to loan more out. They are doing their form of quantitative easing that they always have done through their subsidiaries. And here we have it, basically saying, let's make it happen. Quantitative easing it's not the same way that it does in the United States, or let's say with the ECB and things, but here it is. You can see it for yourself. They want to do that. Another change has been the weaning off of the US dollar as a whole. Remember, I'm bringing you each and every step of this. You stick with me, I'll explain it to you. I'm going to break it down in just a minute here. But this, I know it's small font, but what we're looking at is over the years that China has basically reduced the amount of US debt that they hold. Yes, it is still quite excessive when you see it on the scale, but it has been a reduction over the last while. The second one in the list is China, and you look at it on average, month after month after month, they're just letting less and less and less of it hang around. And they clearly have stated that they do not want to have the dependence on the US dollar like they did before. Part of this is because they have to. They're being restricted from doing trade here and there. They will want, you're not allowed to do business here. You're not allowed to sell your technology there, and all these things that have happened. That puts pressure on China and saying, okay, fine, you want to do that? Okay, we'll play that game. And they are really grabbing the US by the, well, can't say that, but they're trying to do that because both sides are doing the same thing. Okay, there's fights happening here. This is part of the deals that were going on, and of course the summit that took place. More energy deals with Gulf producers. They want to get this going on. And of course, China at the same time is saying, hey, let's do a deal in my currency. Let's make that happen. Oil market stability is something that they stressed the importance of. Big deal right now. I do believe that what China is doing is moving the pieces around this chessboard, and they want this multipolar world. Along with what they had suggested before in the previous article was basically the fact that we don't, what Saudi was saying, look, we don't want to make a mess of this between the US. We're still friends with the US, but we want to be friends with China too. I think that's important to understand, okay? We don't know what they'll do, but here we have it. And then you see right now just basically about the reopening. This is Goldman Sachs, about the reopening of China. It's going to be a bumpy ride. They're saying it's not going to be streamlined. Every investor right now is watching China. And if you're an investor, you should be too, because this is something that's been going on for a while. Can they actually reopen? If they do, there's a lot of potential there that's kind of been sitting around. So let me break this down for you here. For people who don't know, this is going to explain it to you. The implications of China buying oil from Saudi Arabia with yuan instead of US dollars could have far-reaching effects on the global economy and geopolitics. China is one of the world's largest crude oil importers, and it bought over $44 billion worth of crude oil from Saudi Arabia in 2021. This shift to yuan-based payments would reduce the reliance of both countries on the US dollar and would also reduce the influence of the US in their bilateral trade. The political tensions between China and the US are already high, and this move could potentially further complicate their already strained relationship. China's decision to buy oil from Saudi Arabia with the yuan could be seen as a way of circumventing US economic sanctions, which could increase the tensions between the two countries. Quote, "The move is a sign of the increasingly close ties between China and Saudi Arabia and a deepening of our commitment to yuan-based trading systems," that is according to Wang Yi, the Chinese foreign minister. We need to realize that what we had before all these decades is not what we have today. That is so important to realize. And the sooner we do, the sooner we could adapt. That's part of what we'll discuss here. I want everybody to know the next aspect, and that is the economic crisis. The 24 hours of hikes that end year of fighting inflation. So many different central banks right now. Of course, the Fed, they are potentially going to do 50 basis points. That is 0.5%. You look at the ECB, the Bank of England, and others as well. You could see it on the chart here, and it just shows us Tuesday, Wednesday, Thursday, Friday, we got decisions coming out, and I will bring all of those to you. If you hit the subscribe button, you're going to get all that. You're going to get all that information explained very simply. And what are the actual implications of raising interest rates? Well, of course, the reason they're raising interest rates is because they need to calm down inflation. And they've been doing so at a time in which everybody's saying, don't do it, don't do it. Well, look at the stock market. The stock market kind of doesn't care anymore. And it's starting to reject the notion that the interest rates will remain high. And so that's really, if you think about it, it hasn't really gone down. I'm sure if you invested heavily in tech stocks, which is definitely not recommended, you want to diversify. For a lot of people, they just bought tech stocks. So they're obviously down significantly when you see it compared to a larger grouping of stocks. But what happens here? Look. Household wealth is down by 13.5 trillion in 2022. It's the second worst destruction on record. Now think about that. That is huge to just even fathom the fact that we're living right through it. And why? Because we got to a point where things were too excessive. Why did things come down? Because they went up to this level in the first place. If you don't acknowledge that, you're not going to realize why we're in this mess. If you go on Twitter, if you see these average analysts, oh yeah, everything's gonna be fine. I like, they'll just name a stock. I like Tesla. They're delivering 57,000 cars this month. That's not why stocks move. Okay, stocks move up and down because of stimulus from the central banks and the government. And when you start to wake up to that, you will realize the truth. It's all about the stimulus. Is it on or is it off? And that's how you know the general direction. For most people, I'm not giving financial advice, but for most people, they would do much better by owning the simple stock market index, like an ETF, than trying to pick stocks. It's just not going to work for most people, and yet they do it all the time. Okay, look, you could see humans versus robots. The battle reaches a turning point. Robots are just going to be better than humans, or at least that's what the corporations are going to suggest for a lot of different type of businesses, and that's happening. You can fight it all you want. That's happening. You look at things like Chat GPT and other forms of AI that are going really causing a storm right now. They are going to be like, think about where we are today, 2022, and just think 5 years into the future. Where's that going to be? Obviously much more advanced. We've got shortages. We've got problems. This happens to be Europe hit by shortages of antibiotics. You've heard about different medicines that are basically shortage in different places in the world. Shouldn't be like this. Here we are. And real estate, we've got problems there too. Commercial real estate correction coming. And why? Well, you look at different companies, Blackstone being one of them, they've got an issue. Blackstone's $69 billion property fund signals pain ahead for the real estate industry. What do you do when you got a fund and suddenly not enough people want to get in on it and they kind of want their money back? Oh, that's right. You halt redemptions. You stop the redemptions from taking place so that you can make sure everything's going to be A-okay. Oh, and then, you wait 5 years and then people can start getting their money back. But not all at once because everybody rushes out the door and then you have a problem. No, you need to do that slowly but surely. So we see that problem all related to what's going on right now. And it's all because of interest rates. It's all because of the quantitative easing or the lack thereof, quantitative tightening right now today. This is about tech layoffs. Layoffs are taking place and people need to get wise to the layoffs or they're going to be one of these statistics. That is so important. And I need to highlight these details right here and now. If layoffs rise, unemployment rises, people take on 2 or 3 part-time jobs, real estate values decline, all while inflation is high and interest rates go up, it is likely to create a negative cycle in the economy. As people become unemployed, they will have less money to spend, which will reduce consumption. This reduced consumption can lead to further job losses as employers are forced to cut back on production. The reduced consumption and job losses can also lead to a decline in real estate values as people have less money to spend on housing. Additionally, high inflation and interest rates can lead to increased costs for businesses, which can lead to further job losses and reduced consumption. All very important, and it's all taking place right now before our very eyes. So get wise to it. What are people doing? Well, they're moving. They're voting with their dollars. They're voting with their feet. And here we have it, looking at the areas in which people are leaving. And it does not surprise me. San Francisco, LA, New York, Washington. It's too expensive and they're getting out. This is just talking about basically the places to live off grid. And we are looking at that right now at this time where people are saying, I can't do it anymore. Or, I don't want to do it anymore. And they're getting out. This is all within the pillars of prosperity that I talk about. 2 things, okay? 2 things. You could do one or the other, or you could do both. And that is either you get off grid, you simply say, I'm done with this system. That's one way. Or you could do number 2, which is make a lot more money so that you can keep up with the inflation. It is up to you. You got to do what you think is best for yourself and your family. Did you find this video informative? If so, slam that subscribe button right down below. It's next to the like button. And when you do that, you're going to get my video tomorrow. Every single day I do a video, but tomorrow's video, I'm going to highlight some really key information. You want to stay tuned, hit that subscribe. I'll see you then.